The 2010 World Cup in South Africa has presented several opportunities for investors across the region. And to cash in on it, Olympia Capital, a Kenyan company, entered the South African foray, which had a high demand for construction materials. But the economic downturn weighed heavily on its operations and was forced to exit that market as its local subsidiary was also making losses. But this week, the company is ready to return into the South African market.
We first ventured into the Southern African market in 2001, and we have a successful business that we run from Botswana that exports product into South Africa. From 2006, we started purchasing manufacturing business in South Africa. Unfortunately, we used a lot of debt to fund the acquisitions and to fund the operations of the business, and we're doing high levels of turnover. With the recession in South Africa, the business model was not sustainable. So unfortunately, we did not voluntarily exit the market in South Africa. We actually exited as a result of our businesses being put into liquidation. We believed in the products that we manufactured. We believed in the brand names we had. So we acquired those and ventured back into the market. But now we're operating with a essentially almost debt-free and very lean operation. So even at significant lower levels of turnover than we had previously achieved, we would make a profit.
Olympia Capital Holdings is well known as a building material supplier and is listed on the Nairobi Stock Exchange as well as the Botswana Stock Exchange. The company has identified a new line of strategy as it seeks to cushion its bottom line.
One of the reasons why we migrated from the industrial and allied sector of the Nairobi Stock Exchange to the finance and investment is to send a message that we have become an investment company. And so one of our investments will be building material sector, the other will be property. Then we will invest in a fund which will handle speculative investments. It'll be like a venture capital fund, but with a shorter horizon than normal venture capital. And lastly, we intend to go into the food sector.
The company is projecting modest returns of 40 million shillings profit after tax and turnover of close to 1 billion shillings for the current financial period. And analysts feel the recovery of the global economy will boost its operations.
A very modest projections, as we expect the African economy to start picking up again this year, global economy to start picking up again this year, demand for their products to start picking up this year. Actually, I think they might even be able to outperform. It was safer to give the modest projection so that when you outperform, you have the impact of that. Actually, they achieved their goals and they did well. So, smart move.